In this presentation, we will be discussing about the what, who, when, why, and how of the Garuda fraud case.
Garuda Indonesia Group reported a net income of $800,000 in 2018, indicating a sharp increase from the loss amounting to $216 million in 2017. This fraud symptom is known as accounting anomalies. Accounting anomalies is an anomalies result from unusual processes or procedures in the accounting system. There are many parties that are involved in this case, including Garuda Management, Garuda Indonesia Commissionaries, and Garuda Indonesia CPA, KAP Tanubrata Sutanto Fahmi Bambang and Partners, which is a member of BDO International. Garuda Management is the preparator of financial statements for the year of 2018. KAP Tanubrata Sutanto Fahmi Bambang and Partners are the one who audited the financial statements and argued that the financial statement was in accordance with PSAK. The two commissionaries of Garuda Indonesia consider Garuda Indonesia 2018 financial statements are not in accordance with the PSAK and they refused to sign the financial statement. Then they reported it. Apparently, the increase of net income from 2017 to 2018 was caused by recognition of receivable for Wi-Fi installment from PT Mahata Aerotechnology as income, which is not according to PSAK 23, which we will discuss later. BUMN did not respond to the objections stated by the commissionaries when the annual general meeting of shareholders was held on the 24th of April 2019. On the 30th of April 2019, Indonesia Stock Exchange called out Garuda Indonesia Board of Directors regarding the financial statements issue. This case started in early 2019 and ended in mid-2019 when Garuda gets fined by OJK, Ministry of Finance, and IDX.
Now we will be discussing about why this fraud happened to Garuda Indonesia. The reason on why this fraud happened could be traced back to the fraud triangle, which consists of A. Pressure, B. Rationalization, and C. Opportunity. The pressure within the organization is due to the cause that in the year 2017, Garuda had an income, or a loss, of $217 million. That is why there is a lot of expectations for an improvement this year. Managers in charge of creating the financial statement rationalize their decision by saying that they are complying with accounting standard laws, when in fact they are actually not complying with PSAK 23. The opportunity appeared for Garuda Indonesia when a large account receivable transaction happened within the company. Little did the public know that this account receivable would be used to commit the fraud. The fraud was done in a way where account receivables was classified as revenue or profit within the company. This is not allowed in PSAK 23, and doing so would overstate the company's income statement.
Let's take a look at the amount of money involved in the Garuda fraud case. A total amount of $240 million of accounts receivables was recognized as profits even though it has not been paid. This amount is very material to the company, especially since there's a stark difference in 2017 net loss to 2018 profits. Additionally, because of this issue, Garuda was given several penalties from several institutions. Firstly, Otoritas Jasa Keuangan (OJK) imposed a penalty on the board of directors and commissioners of Garuda Indonesia, where each of them should pay an amount as large as 100 million. Besides each member of the BOD paying the sanction, the company Garuda should also pay the penalty of 100 million rupiah. Besides that, Bursa Efek Indonesia or Indonesia Stock Exchange also imposed a penalty on the company with an amount as large as 250 million rupiah. However, Garuda is not the only one who receives penalties. those involved in the audit process of the company also receive penalties from the Ministry of Finance. Minister of Finance Sri Mulyani suspended the operation of Akuntan Publik Hasnar Sirumatea and CPA firm BDO Indonesia for as long as 12 months. There are various laws and regulations affected in this case. Firstly, in terms of Garuda Indonesia, the recognition of the account receivables as revenues before they have been paid violated PSAK number 23, paragraph 28 and 29. Paragraph 28 states that revenues arising from the use of an entity's assets by other parties than general interest, fees, and dividends are recognized on the basis described in paragraph 29 if it's probable that the economic benefits associated with the transactions will flow to the entity and the amount of revenue can be measured accurately. And paragraph 29 states that royalties are recognized on the basis of the substance of the relevant agreement. Additionally, in PSAK 23, paragraph 20, the definition of royalty was explained further. Whether royalty will be received or not will depend on the future event. In this case, revenues can only be recognized if there is a high probability that the royalty is received. Besides the company itself, there are also various regulations that were violated by BDO CPA firm. Firstly, the auditor fails to accurately assess the substance of transactions for the accounting treatment of revenue recognition of accounts receivables and other income. So the auditor has violated Standard Audit 315. Auditor is to identify and assess the risk of material misstatement in an entity's financial statement and implement appropriate responses and procedures which will reduce risk to an acceptably low level. Secondly, the auditor has not fully gathered sufficient audit evidence to accurately assess the accounting statement based on the substance of the transactions. As a result, the auditor has violated Standard Audit 500, which states that the objective of the auditor is to design and to perform audit procedures in such on which to base the auditor's opinion. Lastly, the auditor is unable to take into consideration the facts gathered after the financial statement reporting date as the basis of the accounting treatment, and this violates Standard Audit 560, which states that the auditor should consider the effect of subsequent events on the financial statements and on the auditor's report. Hence, we can see that there are various regulations that have been violated by both Garuda and the auditor. From the various facts presented in the video, this fraud case is not a one-person job, and it involves various parties. So, one key takeaway from this case is that it is very crucial for forensic accountants to stay aware regarding the various fraud symptoms that may arise when fraud is being conducted. Thank you.